Okay, it's Chris from Business of Traders, and we're going to talk bad habits, right? And on the screen we have, on the left, we have a spreadsheet, which we're going to talk through, and on the right, we actually have a chart to just demonstrate each one of these. Now, if you have a bad habit, and we all have bad habits, right, then if you identify them, then you can actually change that habit. Now, Rome wasn't built in a day. On average, it takes 6 weeks to change a bad habit. Now, what you need to do is 1, identify it, and then 2, focus on that particular habit. Now, what I would say is don't try and change everything at once. It's just not going to work, and it's just going to overwhelm you. But what you need to do is identify where you're going wrong when you're trading. So without further ado, let's talk about this spreadsheet on the left-hand side. So first one we've got, entered too soon. Right, well, the fact of the matter is, and if we just look at the left-hand chart, we see it in this range here, right, and you can see it's coming down. Obviously, if we'd have entered there, then it's too soon, it's going to stop us out. Now, obviously, what I would suggest you do is at the end of the day, look at your charts, look at your entries, and then obviously tick these off. Or you can do it as you're trading, i.e. after a particular trade is finished. So we've all been there, entering it too soon. Now, obviously, bear in mind, this is going to skew your results. If you keep entering too soon, you're going to get stopped out, right? So obviously, you need to know what's actually happening. Conversely, entering too late. Now, obviously, we have a signal here as an example, and that's perfect. We're at the right point. It's near a level, right? Whereas this one here, we've got a signal here, it's not near a level, and as you can see, it goes down. Now, this is why we have the range detection bot on here to basically see where we're in the range, and here we're right at the top of the range. And as you can see there, literally, when we're here, we're at the bottom of the range. So again, entering too late is something that you can quite easily identify, right? So obviously, sometimes people have confirmation bias. Obviously, they need to see it going up before actually going into it. But you can quite easily identify that. Exiting too soon. We've all done that. Now, that's more to do with risk. And what I basically mean by that is if you're exiting a trade, what you're really wanting to do is just take the risk off the table, right? So you need to be happy with what you're risking, right? And you need to also know on your plan what your target is. Now, obviously on this here trade, and if we look at this, 1B is one below, right? So that's the level, right? And we did have a level here. It's actually recalculate this level. So then it literally, the target for this particular trade is 1A. So obviously you can see there it's 2126. And as we speak, this is a live chart and it's progressing to that. Now, obviously you could just get out on a push here, right? You could get out when it slows down here. But obviously, the fact of the matter is just look what you are leaving on the table from there to there. As an example, it's 95 points, right? So exiting too late. Well, the fact of the matter is if you have a specific target, right, and say for instance it is the top of this particular swing, i.e. you can see the distribution there, i.e. if it fails initially on here, you can get out there, i.e. when it comes back down, then basically you can see just how this can affect you. Now, literally what you need to do is think about, top tip here is plan your trades, trade your plan, and in your plan, focus on what is the issue, right? So what I mean by that is as in, say for instance, you decide that this is your target, right? The top of this distribution, just as an example. I'm just going to mark it out here, right? Okay, so we're top of the distribution and we have a high volume ledge there. So that's when you want to get out on that, right? These yellow signals, they depict aggressive buyers, right? So obviously you do get aggressive buyers at the top of a swing as well as at the bottom. Now, if that was your plan and you put it on your plan, then basically you trade that plan, and then this helps you over here, right? So basically it helps you with the too soon situation, and it also helps you with the too late situation, right? So obviously the fact of the matter is say for instance you don't know what's going on and you say, right, well this was my plan, and then obviously it comes down here, then you're exiting too late. Now if your plan is to hold to the top of this distribution or to hold to this level, then trade your plan. Now conversely, basically don't get out of a trade when it then starts going against you. Sorry, get out of a trade when it starts going against you. I say, for instance, we get to this level, then we get to here, and then it tanks fast. Then get out, but have it in your plan, right? So trade not from a signal or a plan. Boredom trade. Well, look, we've all been there, right? We've all taken boredom trades, right? You know, if you're sitting through hours of this stuff, right, you're going to get frustrated. Top tip: walk away from the charts, have an alert when price starts moving. We have an alert there to say that we've got fast order flow, aggressive buyers, right? So we don't need to sit through all this lot, right? Which, if you look, is pretty damn slow. And obviously we're looking at Globrix here, right? But you can see there we've had another signal there, and that's bang off that particular level. So it's come down to that level and then popped, right? Now, exiting too soon. If your target's there and you exit there because you see this, you're exiting too soon. But equally, in your plan, focus on what you want to do. If you want to basically say, I'm risking, say for instance, 10 points on the NQ, just 2 seconds, let's do a risk to reward so you can see. Off your level, and that's your target, right? So you can see there we've got a stop of it's actually 14 points, but as an example, let's bring it down to that, right? You can see there you've got I'm just gonna highlight it there so you can see it. In fact, actually, I'll tell you what I'm going to do. I'm just going to make this opaque. 2 second mundos so we can actually see it. Right, so obviously if we're targeting a 5-to-1 as an example, that's your target. Just get out at that point. So that's about trading your plan again. Right, incorrect stop placement. Right, okay, we've all been there, right? We need to know the key point of a stop is this, right? Stops are there for when you're wrong, right? Now, obviously, if this, just as an example, let's just have a look. If this was just to continue going down, right, then obviously, and this is my level, right, and it doesn't even break and come back down, right, then having a stop down here is wrong, right? The fact here is we need to basically keep the risk to reward successful, and what I basically mean by that is obviously if you go, well, I'll have a stop down here, that means basically you stops way too wide, right? So stops are there for when you're wrong, right? So make sure you get the right stop, right? And I just want to show you as an example. In fact, let's talk about. And in fact, have we got one there? I'm just looking. I'm not looking for a failed level, basically. Right, okay, so basically, say for instance, our target is for this to go up, right? And you can see there we've got 36 points. Say for instance, we've got 100 points here, right? Then literally, for the risk to reward to be correct, you need to be looking at this, at a 20-point stop, no more than that. Now, generally, my stops are between 8 and 24 on the NQ, right? But what I'm saying is basically do your back testing on your stops, right? You can quite clearly see, right, if this breaks this level, right, which it does here, we're wrong. So if we're down here, we're wrong. So literally, the key point here is and a point to note with your stops is this, top tip. Make sure that they are within the fractal rotations, right? So basically, if we know, as an example, the fractal rotation of the NQ, just let's see if we have that particular bot on here. Don't know whether we do. Yes, we do. Right, 2 secs. Right, okie doke. Right, what do I want to do? Apply it. Right, I'm just going to widen this out so just to show you. Right. Right, the average rotation on there is 51. Right, so obviously the fact is if we're aiming for one swing, then we're aiming for 51 points. That means basically if we're looking at, say for instance, what should our stop be on that on a 3 to 1, it should be 15. Right, and you can see here basically the average length to the relative volume. So obviously if the relative volume is a lot lower, then you're going to have a lower length. Now obviously the fact of the matter is if you look at this, and obviously when you need to be thinking when you're trading. So when you're trading your trading plan, obviously we're talking RTH here, stroke Globex. Obviously if we're in Globex, it's going to be a lot slower. Obviously you can see there the relative volume is a lot lower. And obviously at the moment it's reading 0 because it's literally there's nothing going through as we speak, but you can see there that it works out and says right, this is the swing lengths at the moment. So obviously in that scenario you need to think about basically what your stops are. So 2 secs, we'll just hide that off because obviously we don't need it on. Oh, we have got loads of bots on here. Right, so we're going back. Right. Right. Let's just scroll the chart to the end to see what's going on. Right, so we are coming up to this level now, and obviously you can see it's coming down. So moving on, wrong position size. Right, this leads me back to this one. Exiting too soon. If you're in profit and you just want to get out of a trade, then potentially your position size is wrong. Right? So just think through on that. Now, we don't want to be adding to a losing position, right? If you're going to scale in, and obviously if you're scaling in on this, then you can see there as an example, basically we've got a rotation alert there with the purple diamond, and then basically you can add your trade here, right? So obviously you're within the range detection bot, which is detecting a range, and we're at the bottom of the range because obviously we don't want to be trading a long here, right? So we enter here, but then you can see there we've got aggressive buyers coming in. So if you want, you can actually add there, right? And then obviously it goes up. So that's just a bit about position sizing it. Didn't take the signal or the planned trade, right? Well, look, the fact is that means you're hesitant, right? Now, why are you hesitant, right? It could be what size you're trading, right? Again, it comes back to size. Size is important. Size is important in everything, right? And the fact of the matter is basically if you're trading one contract, right? So for instance on options, you're not going to be profitable. It's all about execution. It's all about practice makes perfect. Obviously, everyone can size up, right? And coming back to that, basically, and I've come back to it quite a few times, size up after consistency, right? So this will highlight where you're weak, right? But when you then become consistently profitable, then you can size up. So today we're just concentrating on our weaknesses, right? Now, obviously, every one of them is a weakness, right? If we identify that weakness, then we can improve. Trading is all about improving, right? It's all about improving. I've been trading for 30 years, and I can honestly say I'm still improving now, right? I learn something new every week. The markets are always changing. This is why it's an exciting environment to be in, right? There's always something new coming out, i.e. new data feeds, new ways of trading, and obviously we're improving. I mean, if you look now, most of the market is automated trading, right? Most is done by automated bots. Now, how's that changed the markets? Well, the fact of the matter is when we start selling off, we sell off a lot quicker these days than, say, for instance, back in the 1980s, right? Or the 1990s, right? So this is basically what I've put together to help you guys, right? And just let me know what your weaknesses are and let me know how you progress. It is... And let me know if there's anything I've actually missed as well, because obviously, you know, we want to get everything on there. and then we can tick them off as we are trading, and then we can improve as traders. So that's, oops, just deleted one of them, right? So pretty much that is all I've got for you on this video today. So it's all about improving your habits. So go away, think about where you're weak, think about how you can improve, and then become a better trader. And all that remains for me to say is bye for now, and see you on the next video.